In this midweek video, we'll look at something that can help us from a probabilistic perspective in terms of planning for the next few weeks and year end. There were some outstanding trend exhaustion signals that were present from a DeMark perspective near the peak in 2000 and again in 2008. In this video, we compare those signals and ask, do we have them in the present day? And then we'll close the video with a quick update on the poll. To view the video in full screen mode, use this icon in the lower right-hand corner of your video player. To improve the clarity of the charts, use this icon in the lower right-hand corner of your video player. This is a weekly DeMark chart of the S&P 500 index. DeMark charts and indicators are proprietary tools from Market Studies, LLC. Point of the exercise, cursor, weekly. This is your major bull market peak in October of 2007. And this is what we want to avoid. This is the 50% plus decline that finally bottomed in March of 2009. For those of you that are new to DeMark, DeMark has counts that help us with trend exhaustion. So you get a 9-cell setup paired with a 13. When I get a 9 and a 13, this 13 tells us that the probability of the bullish trend being exhausted has increased. And as long as price stays below this risk level, the probability of bad things happening increases. So you can see here in October of 2007, this was an excellent signal. That's the aggressive sequential. And we also had a 9 paired with a 13 on the aggressive combo. Now let's look at the present day and look at all 4 weekly DeMark counts. Now we're looking at the exact same DeMark chart as of December 16th, 2013. This is Thursday afternoon before the close. The purpose of the exercise is to look at the potential of reversal prior to year end. So we're looking at a weekly sequential count on the S&P 500. This looks noisy, but it's easy to understand. This is a 9-cell setup paired with a 13. If you remember, when we looked at 2008, we had a dotted line above the 13. As long as the line remained dotted, it told us that the 9 and 13 was still in force. When the market violates the signal and the line turns solid, it still gives us good information. It tells us, rather than trend exhaustion here, that the trend is strong enough to carry forward. So on a standard sequential count, this 9 and 13, for the most part from a probability perspective, has been invalidated, especially as long as this line remains solid. The current count is a 9 paired with a 5, which tells us we would have to get a 6, a 7, an 8, a 9, a 10, 11, a 12, and a 13. And these are weeks before we would get a 9 and 13. So the standard sequential count leaves the door open for stocks to rally for several more weeks. We'll look at the combo count. Similar situation. We have a 9 and a 13. This tells us the trend is strong. That was a good signal. Stock market continued to go up. And we have a 9 and an 8, which also leaves the door open to get from this 8 to a 13. Aggressive sequential, similar situation. This 9 and 13, strong trend here, good signal telling us that the trend was strong enough to deal with this 9 and this 13. The current count is a 9 and a 6, again aligning with the probability of leaving the door open for stocks to rally further. We always think in probabilities, and that includes with DeMark counts. Now we're looking at aggressive combo, a 9 and a 13, strong trend, good information, and we have a 9 and an 8. So the moral of the story is we do not have an active 913 on the weekly S&P 500 index. We started the video looking at the 2007 peak in October. This is 2013. Now let's look at the peak in the spring of the year 2000. I started with Morgan Stanley in 1994, so I remember this peak well. Here's your 13 that came, an excellent DeMark signal, a 9 paired with a 13. Here's your peak in the March of 2000. This is what we want to avoid. This is the 50% plus decline after the dot-com bubble burst. Here's a 9 and a 13 occurring in October of 2002, telling us that the bearish trend had reached a probabilistic exhaustion point. Excellent signal, excellent signal. We can also look at the aggressive combo count, a 9 paired with a 13, and you can see this line is dotted here. So in the present day, if we came back down in this direction and the DeMark signal changed back to a dotted line, there is a probability that we could still see some problems on this aggressive sequential count. The combo count was a little cleaner. You had a 9 paired with a 13 here, and the dotted line with a count remaining active near the peak. And now on to topic 2. For those of you who have already voted in the Who Taught You the Most, shared the most useful information for trading poll, we can't thank you enough. If you haven't voted yet, the poll is open until 7 p.m. this evening, which is Thursday. You can vote for @Shavaco Capital. You can find a link to the poll on Short Takes, our Twitter feed, today's Seeking Alpha article, and inside your most recent YouTube subscriber email. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.